right now. It's up about 0.5%. So I think there's a bit of a churn. After 2 days where you've seen the bank nifty take the larger part of the gains, it's now coming back a bit to nifty. And, stocks like Asian Paints, Maruti, these kind of stocks are doing well. But let's see, it's expiry week, so there will be a lot of volatility. Mid caps, well, what can you say about that? That index still doing well. But I think we have our market master ready. Mihir Vora is joining us, Director and Chief Investment Officer at Max Life Insurance. Mihir, good morning. Thanks for joining us. Mihir, what's your market strategy right now? We're practically at all-time high. In the broader market, we're already there. So what do you do at a market like in a market like this?
So Anuj, what we have done in the last few weeks is we kind of become a bit more aligned towards the benchmark. We are not taking very huge bets on sectors and stocks because this rally is driven by global and local sentiment, and to that extent, we've seen a good amount of sector churn. We saw banking correcting very sharply from February till April, and then it's been outperforming after that. Similarly, metals have done very well. Probably a huge part of the big gains in metals is already done. So sector-wise, there is very little to differentiate now sharply compared to 2 months back, where we really had a theme where you could go overweight on banking, overweight on metals. But now it's a bit more difficult to distinguish across sectors. So we're hugging the benchmark. Let's put it that way.
Point taken. A lot of run-up has happened, but Anuj, you said that you would expect a bounce back in metals. That's what's happening actually. It's not so much the Asian Paints and the Marutis that are pushing up. The money is clearly going from banks to the metals. They took a back seat for a couple of days because of the China factor or whatever, and now I think handing of the baton is happening, right?
Oh, absolutely, Lata. And today is the kind of a day where traders take that risk. All these stocks, Tata Steel, JSPL, I know when stocks in a bull market of their own correct to 20-day moving average, and there's always a risk reward which is in your favor, Lata. Still a long day ahead, so anything can happen. But yes, the gap up has been quite interesting on some of the big names like JSPL and Tata Steel and Vedanta as well.
Yeah, actually, and it's spreading to the aluminums of the world as well. See, Nalco up about 1.8%. Nigel was pointing out in his momentumizers, and Hindalco as well, up about 1.7. SAIL is up 1.7. Hindustan Copper, which has been having a raging day, is up 1.5. So today is quite clearly a metal theme for the trader lot. But what about the investors? Mihir, you said that you've played the banking and the metal theme enough. So what do you do with fresh investments? Where are the pockets of value?
So that's what I was saying, Lata. We kind of staying closer to the benchmark than before. The underweights and overweights are lower than what they were, say, 2 months back. So it's basically a diversified basket we would like to go with because, now if the economy does come back, then you will see the underperforming sectors like discretionary, autos, etc., which have not participated in the last couple of months. They might start to build up. IT has not participated that much. So there is relative underperformance of auto, IT, in the last couple of months. So if the trend continues, then probably this is the next bunch of stocks to look at.
Okay, that's interesting. Mihir, good morning, because I think you're the third person in the last couple of days telling us that autos and auto ancillaries will do well. But is it only because of underperformance, or are you seeing some fundamental trigger as well? Because, we are still hearing that there are a lot of problems in the sector, supply side issues, dealerships are shut, demand is under pressure. Then how are you, or why are you optimistic on autos?
So Sonia, good morning. We have seen the markets are always a little ahead, isn't it? While banks are giving a good commentary now after the results, and banking index has gone up because the NPA issues and the management of the second wave seems to be much better than people feared in banking. But the banking index started bottoming out almost 4 weeks ago, 5 weeks ago. Similarly, metals, for example, even before the Chinese steps came in, we did see a consolidation of metal stocks. So markets are always a little ahead. And if we are looking at the market sustaining at these levels also, let's not even talk about going up. Then the next leg of stocks to go up has to be in the domestics. While fundamentally you are absolutely correct, there is no incremental data to make us very happy about what's happening in auto. Auto ancillary is different because there are good exporters out there, but the core auto, whether you call it cars and two-wheelers, there is fundamentally very little data. But well, structurally, the markets at some point in time will discount the fact that if not now, after 4 months or 6 months, demand has to come back because people are not going to be able to do without cars and two-wheelers. So markets can tend to be a little forward-looking. And if the market sustains because the rest of the sectors have done well, then the catch-up trade should happen.
Okay, catch-up trade should happen. By the way, Mahanagar Gas is surging right now post the numbers, so that stock is looking interesting. And Nestle is making a bit of a comeback, so there are a couple of other stocks looking interesting. Mihir, what about this pharma move? Now, do you think it could still be a market outperformer? Do you have overweight on pharma? What's the way to play this sector now?
So pharma, chemicals, auto ancillaries, and IT. These are some of the segments which we are structurally bullish on for quite some time, and I think will continue to remain bullish because these are all external looking segments. Of course, pharma is also a big domestic market, but it has a good exposure to exports. So our core thesis is that given the state of the economy and the fact that recovery in India might take a bit longer because of the second wave and the damage that it has done, there is always a case for remaining overweight on the global facing companies and sectors. So to that extent, pharma is something that we would like to continue to stay bullish on.
Mihir, anything with the word petro is running up now. After HPCL and IOC, of course, IG Petro numbers were good, and that's up 5.5%. So even any stock with the word petro in it, Manali Petro, everything is going up. Oil and gas space?
So I think it's just a coincidence that the private sector companies also have petro, but they don't really do oil and gas marketing. Yeah, they are specialty chemicals. So anyway, that segment is doing well. And it just also so happens that the other petroleum companies, so to say, are PSUs, and we do have one of the large companies in that segment going in for divestment. So that kind of has gotten re-rated and probably dragging up the rest of the PSU pack also along with it.
Okay, I wanted to ask you about these amine-based stocks. I mean, the reason I'm asking is because some of them are in focus. Balaji Amines came out with good numbers, but the stock is down about 4%, so there's some profit taking there. Would you advise investors to buy some of these, niche segments on a dip, or do you think that this story has already played out?
So I'm not very conversant about the specific segment that you talked about, but specialty chemicals in general should remain a structural play at least for the next few years. Not only because of the global supply demand, China plus one strategy that multinationals are adopting, but also because of the fact that we have good PLI incentives also likely to come in and help this sector. So there are good tailwinds, global as well as local for the specialty chemical space, and it also kind of overlaps with API and pharma. So that, as I mentioned, the global facing sectors are anyway what we like. So valuations, of course, are a bit expensive, but if one were to take a 3-year view, then I think we should be fine.
Mihir, is the market being too complacent about any potential earnings damage? This because of this second wave, it's hurt people and it hurt them financially as well. Or do you think the market believes that it will be again just perhaps 1 quarter, 2 quarter issue and the market will move on? Your sense?
So Anuj, as I mentioned in the beginning, if you look at the FYTD performance from say 31st March onwards till date, if you actually break it down, most of the performance has come because of metals and pharma in April. And then we had the catch up by financials in May, end of April and May. So the markets have not really yet started rewarding the consumer discretionary, the local economic space. So if you pick auto, FMCG, in auto we're talking about two-wheelers, cars, FMCG. Those kind of names are still not outperforming, which means that the market is saying that the globally linked sectors like metals, pharma have outperformed. The market is betting on that, and banking did very well in the last 4-5 weeks because it had fallen also very sharply. It was one of the worst performing sectors from the time that we saw the wave 2 cases rising in February. So the peak of banking index was in February, and then it fell almost 20%. So it was the worst performing sector. And from that bottom, it of course has bounced back quite sharply as the commentary has been good. So I don't think the market is yet betting on a strong domestic recovery. So if that happens, then we might have one more leg. If it doesn't happen, of course, then we have a slow W kind of recovery.
Okay. Well, very quickly, I have a last question because we have a power magnet waiting by. I want to ask you about power stocks. India has not invested much in power because a whole host of projects went into limbo in the 2014 to 2017 period because of NPAs and a whole lot of issues. Now, of course, the ESG wave is there. How will you play renewables?
Lata, unfortunately, there is very few, good options available in the power ESG power generation space, and whatever options are there on paper at least look very expensive. So to that extent, you might want to just play more through the EPC space, find some contractors who are kind of executing those projects.
Okay.
And so coming to the power segment per se, while you say there's not been much action on the power space, a lot of capacity has actually come up in the solar and
Yes.
wind space. So to that extent, it's not like power capacity hasn't come up. It hasn't come up in the thermal space that much.
Yes. Okay, that's a fair point. We are racing ahead in solar power. That point is taken. Thank you very much, Mihir, for joining us with your views today on the market. Market at this point in time, a little sedate, which helps us to concentrate